the last Targets in Focus interview of the trading week, so let's take a peek at how US dollar pairs look set to perform with my guest Peter Dragicevich of Commonwealth Bank of Australia. Peter, talks of tapering off quantitative easing has been the driving force across global currencies in recent trading. How have the US dollar pairs fared this week? And looking ahead, what will the drivers be for these pairs over the coming weeks?
Well, we've seen the US dollar actually soften over the last few sessions. Now, we've had, I think, participants are starting to pare back their expectations of whether the Fed will announce anything next week. And in our view, it was always too early to expect the Fed to announce something in June. We still think the Fed will taper its asset purchases, but that's more of a story for later in the year. At this stage, we think it'll be in December. But over the coming week, the FOMC meeting will be the pivotal moment or focus for markets. And we think, as I mentioned, we don't expect any change in policy this week, and we think Bernanke will use the press conference to just reiterate that whilst the improvement in the US economy has been welcomed, they would like to see a few more months of sustained economic improvement before they will consider tapering. So he'll leave it very much a conditional statement around tapering, and we think in that if that's the case, then the US dollar could soften a little bit further. But overall, we still think the US dollar will trend higher over the course of this year.
Since the closing months of 2012, the Japanese yen has plunged 22 to 33% against its counterparts, a move extended this week on doubts over the Bank of Japan's effectiveness. Japanese officials have declared a preference for a weaker yen, but how low is too low? And how do you see the yen performing against the US dollar in the short, mid and long term?
Well, historically, dollar yen at around 100 or in the high 90s isn't that high. Looking back at a longer term chart, you did see dollar yen trade a lot higher than where it is currently. So we don't really think that the yen has depreciated from an historical basis by a significant amount yet. We still favour dollar yen to lift over the course of the next few quarters and into next year. We think it's more a story of obviously US dollar strength on one hand, but you've also got some structural changes happening in the Japanese economy. On top of the massive amount of policy easing that the BOJ is implementing, you've also got the deterioration in Japan's current account surplus, which over the last decade, it's really been that current account surplus which has supported the stronger yen. So as that continues to fall away, we think the yen is looking to decline more from a structural sense. So over the course of the next, say, 12 months, we think dollar yen can push back above 110. And by the first quarter of next year, we're actually forecasting it to rise towards 120.
Comments this week that the Aussie dollar US dollar remains susceptible to fresh selling will do little to curb a weakening Aussie dollar sentiment. What is needed from the markets to pull this pair out of its current performance trend, and how is this priced into your forecasts?
Well, you're right. The sentiment around the Aussie has changed quite dramatically over the last few months. Something we have noticed is that the expectations that the Fed will eventually pull back from its stimulus, and also when you combine that with the low rates of inflation globally, that's pushed US long-term yields back in real terms back into positive territory. Now, in that type of environment, that's really a negative for commodity-based currencies and also the Asian-based currencies as well. So we've seen dollar Asia sell off, and that's also weighing on Aussie itself. So in the short term, we think next week's FOMC meeting will be a pivotal point for the Aussie. If we're right and Bernanke repeats that tapering is a few meetings away at the earliest, then we think the Aussie can drift back up towards the high 90s. But over the course of this year, we still think that the Aussie will track lower. We've got a forecast of 96 by year end. At this stage, I think the risks are that it's a little bit lower than that. But again, there are some strong pillars of support for the Aussie. The economy in Australia, despite all the negative press and sentiment, is still doing quite well. Our yield advantage is still quite high despite the recent RBA policy easing. And we've also got a lot of flow of funds still coming into our mining investment, and those flows should continue over the next 12 to 18 months. So that's another underlying element that should support the Aussie going forward over the next few quarters.
And lastly, taking a look at the euro, the single currency sat quietly against its US counterpart in advance of US data this week. Can we expect a similar performance ahead of next week's FOMC meeting, and similarly in the longer term?
Yeah, well, as I mentioned previously, the FOMC meeting is a key event. We wouldn't expect too much action in most currency pairs up until the meeting dates. So in terms of the euro, it is going to be dependent on how the market reacts to the Fed. But we've also got some key data next week out of Europe. We've got the flash estimates of the June PMIs. Now they've shown some improvement over the last month, but again, you need to take that with a grain of salt. Despite improvement, they're still pointing to economic contraction. So on the one hand, you've got expectations that the Fed will eventually taper its stimulus, but as the longer the recession continues in Europe, the higher the probability that the ECB may need to do more policy response. So that divergence and the growth differential there should see euro drift lower over the course of this year. But again, we don't foresee it falling too far. The Eurozone has a large current account surplus. It's now almost 1.5% of GDP, and that provides a good layer of underlying support for the euro.
That brings us to the end of the interview and also the end of the week here at Dukascopy TV. I'll be back on Monday with another Targets in Focus interview. Goodbye for now.